I'm going to.
I got it. Hey, everybody. Welcome to the weekly tax update for November 17th, 2023. Back after a 3-month hiatus, and I don't know that I'm quite ready today to do this anyway, but here we are. Thank you. I started up on a week where we have staff out, right? So we're putting this together as best we can. This program is brought to you by the monthly subscription program. If you are not a subscriber, consider becoming one. All sorts of content, about 300 hours of new content a year, almost 300 hours of recorded content available to you, all for one low price of $52 a month. Those of you with small practices, the Tax Practice Support Program, Tax Office Support Program meets once a week year-round for 90 minutes on Friday afternoons. During tax season, we add an additional 2 hours. Potentially this tax season, we're going to try an additional 1 hour to put all the international questions in by itself. So up to 4.5 hours a week during tax season where you can plug in, get your questions answered on tax work, office procedures, tax software, anything we can help, we will try and help you. So Tara, this program is for you. If you are looking for the after program, I have one small error there. Of course, it's not coming soon. It's here. If you would like if you're a subscriber only, you can do the self-study annual filing tax refresher program and get the AFSP designation. You just have to get the material, take the exam. We have all of it available for you. And there's still a couple more people. The next couple of people who pass are still eligible for a $25 Amazon gift card because we're so happy to reward you for doing something that we're doing for free. Am I ever going to get through these commercials? The free ethics program is coming up on October 28th, the Giving Tuesday ethics program. Frank Agostino suggested the title, and I said, we can do that. So ethics and the misuse of AI. I'm the speaker, so we're starting to do an awful lot with artificial intelligence. I have actually 2 programs I'm working on now that are going to be given next year. One on using AI to respond to tax notices, and another to help with basic research in assembling things. And I have to tell you, Frank's idea on some of this too is, he said, after you get it to write the notice, give it to another artificial intelligence and ask it to be the IRS and write the rebuttal against the memo that you're sending in for your abatement or whatever. And it just takes you in amazing direction. So these will be some great material to have this year. And speaking of AI, Hector Garcia will join us on November 30th for 2 hours, where he will talk about our title, Tax Office AI, Rise of the Machines, but he's going to talk about the use in general of artificial intelligence, ChatGPT, and these tools in the tax practice. So please join us for any of these programs. If you're a subscriber, they're all included. A hot topic this week, I modified the presentation a little bit because I was going to talk mostly about current events, and then this keeps coming up. So we have I probably should have stuck an extra slide before this to tell you the context. I don't have the context here. So with respect to the Corporate Transparency Act, if you don't know what that is at this point, I've got plenty of videos. I think one of them is even free, but go watch the videos. They're in there as your subscription. We just did one the other day. It's all current and up to date. So all your clients are going to need to meet the requirements of the Corporate Transparency Act next year. The entity exists. They already, prior to January 1st, 2024, they have an entire year to comply. New entities need to comply immediately. So that being said, we come up with this idea of the unauthorized practice of law. Where did this come from? Well, I wrote to my insurer, Travelers. Travelers I have through Interwest, which used to be Placer. They're up in Roseville, California, and they are NAEA's preferred provider, vetted, and they're good, right? That's why we go there. So I wrote to them and said, we're all talking about, then they know I speak on these issues. They know I'm going to repeat things. So everything I get from them is usually back in an email. So I said, a big question, has Travelers or any of the insurers developed a position on whether they are going to cover or not any claims related to Corporate Transparency Act? And Travelers came back and said, We think it's the unauthorized practice of law. Now, since they're not the government, how can they make a determination if it's the unauthorized practice of law? Yet here they are, they did. So that being said, Travelers is not going to cover any claims related to the Corporate Transparency Act. Ouch, not cool. Fred, all insurance carriers are going to wish we didn't do this. I'm going to add one point to that, Fred. Just hold that thought for a minute. So Cameco, which is a large mutual insurer that insures many CPA firms, and especially the small CPA firms, has said it's not the unauthorized practice of law yet. In fact, all 50 jurisdictions have not yet, no jurisdiction has yet in the country has said it's the unauthorized practice of law. I'm in a paid group. If you know Jason Stat's Realize group, I'm in Realize, and someone there is a CPA practicing in Texas. She contacted the bar, and the bar said, in fact, that no, it's not the practice of law at all. You can go ahead and do this. And Texas is a place where you can't even form an LLC without being an attorney. So very interesting. The attorneys don't want to do these forms. Now, just dialing back to Fred's comment for a minute, I believe 90 or 95% of the time or greater, all of us can do this stuff. You sit down, your landscaper, the guy that delivers tools to the car dealership, all these one-person S corps and these very small businesses that make up a large portion of the U.S. economy, it's going to be very clear-cut. You're going to ask the questions, they're going to give you the information, you're going to file the paperwork. It gives no more rise to the practice of law than what we do every day. Now, an argument on Facebook from some folks that are like, I can do this all day long because I interpret things all day long, including divorce agreements, trust agreements, and things. And I said, well, wait a minute. You interpret where it says the trust shall distribute all of the income. What's the income? That's tax stuff. What if the agreement says you shall give to all of your children, without their names or who their parents are, an equal distribution? And one day someone shows up and says, yeah, I'm an out-of-wedlock kid and I want my share. Well, I would hope all of us, advice to the client at that point would be, you need legal counsel. That is now beyond us, and I'm putting the pencil down. So the same thing, we would reach that with Corporate Transparency Act stuff on some of these more complex arrangements. And I think as long as you do that, you are not going to be in the unauthorized practice of law. Donna's commenting, the bar probably said, what's that? I will tell you this. I have 2 clients who are partners in huge global law firms, and I asked them, can I ask you a question? So both of them, when I started speaking about the Corporate Transparency Act, they did say, what's that? Me being me, I followed up with, the new beneficial ownership rules. Oh, yeah, hot topic here. Ding, ding, ding. We had a conversation about it. Of course, all these larger groups, you might be a real estate attorney and form LLCs, but you've got people that are going to do the BOI work. You're not doing it. But they've said they can't do this stuff cost effectively. You're going to bill somebody $400 an hour to meet with, $250 an hour to meet with the paralegal, $400 an hour for a staff attorney to key it in, and $600 an hour, probably 0.2, for the partner to review everybody's work by looking at it, and you can charge for billing, right? And he'll charge for creating the bill. So we're going to see what's going on here with this stuff. But anyway, Cameco, back to this, is saying that it's not the unauthorized practice of law yet. No jurisdiction has ruled as such. We think it's a bad idea that you do this work, CPAs, and we want you to put this in your engagement letter. So if you look at the engagement letter, they look at this paragraph. Remember, this is outside their firewall. It's publicly available, so I have no problem sharing it with you. You know that I am generally opposed to taking a verbatim clause and sticking it in your engagement letter. That's how you get sued in the wrong county. But the letter says management. Now, if you remember in the attest work context of CPAs, auditors, management means the client, the person you're talking to. Managed responsible for client's compliance within the CTA, if applicable to its businesses, blah, blah, blah. Firm is not rendering any legal services as part of our engagement. We will not be responsible for advising you. We should put that down on all of our tax work, right? We will not be responsible for advising you regarding the legal aspects. If you have questions, talk to your attorney. Now, our engagement letter says at the end of that something to the effect of, that it's excluded under the terms of this engagement letter. However, we remain available to assist you under the terms of a separate engagement letter. Probably I'm going to use another entity to do this work, but we're probably going to do this work because the bulk of this work is going to be a 1-year job this year, right? So why wouldn't we, if we can do it, take in the money, take in the revenue. All right. Were there any good comments? So someone said that travelers, all right, Deborah, I don't know where you're calling, but if you call through the NATP program, obviously I am not in California, and I also know a large number of people that are using that travelers program, so they do write it outside of New York. If you email us, email me or email Nicole, and I will put you in touch with our contact at Interwest. And let's face it, I'm a guy they'd want to get rid of if they're going to get rid of anything. So, okay. Now, so TIGTA has a study out. I gave you a complete copy of the study, and I ran out of time to do a whole full big analysis here, which I would like to do. But I always like graphics, especially when they're free. I didn't have to create this. It's a cut and paste out of the TIGTA report. TIGTA report, if you don't subscribe to them, you should. You get about 40 a year. And sometimes they're, a real yawn. But TIGTA is looking at all sorts of things. They're the internal auditors. So they're looking both at what the IRS was supposed to do and did they do it or not do it, and what the programs they are doing, how well did they work out? Does this make sense? So one of the things they're looking at here is the 2023 filing season results. And if you look for the current year, right, processing year 2022, if you look at the number of paper returns, they have 1/10 of what they had at the end of last year, and they have 1/6 of the amended returns. Millions down to hundreds of thousands. Error resolution, you can see how many are sitting there, 120,000. There's more in error resolution. That's an interesting anomaly. There are a lot more rechecks this year, and a large number of unpostable returns. Unpostable returns are things like, I'm an S Corp, but there's no S election on file. That return is unpostable. They have it, but they can't post it to the master account. Rather than giving you the current weekly numbers, I thought I would give you this also from the TIGTA report. So we're comparing 2022 versus 2023 and the change. There are actually about 1,400,000 or so, 1,800,000 returns less this year than last year have been filed. Paper returns are down by 7.5%. That's a crazy number because we're down about 600,000 paper returns. Yeah, they do pull name changes. It's errors, Kathy, because that's how they can. Remember, they want to do it. They don't have necessarily the authority for some of this stuff, so they take the change as a math authority and they pull it so that they can determine if it needs to go into error correction, if it needs to go into identity theft or not. E-filed returns, surprisingly, are down. Now, we knew they were going to be down. The 20 and 21 numbers, we knew they would be down into 2022. Primarily, or 22 into 23, primarily because of all the folks who didn't need to file who did to get EIP, or all the people who filed normally or joint filers filed separately for one reason or another. It's very interesting. Number of tax preparer prepared returns dropped. This number used to go up every year by about 1%, and it was quite amazing because I had John Hewitt using that as his selling technique back with Liberty Tax Service. Oh, every year it's going to go up, go up, go up. Number of returns done at home on home computers is down 2.2%. Number of free file returns down 10%. Now the free file numbers are going to continue to drop for a number of reasons. One, H&R Block and Intuit both pulled out a free file, so that says something. And we also have the IRS developing their own tool to let people file, along with a number of states have signed on to say, yeah, we're going to do this too. Very interesting. So the rest of the statistics are just interesting. I don't know how we worry about them, how they affect us. I don't think they do. Who cares how many people get direct deposit versus how many want a check in the mail? Fraud is always of interest to us. And if you look, number of fraudulent returns, 21 to 22 went up by $22,000. But look at that number after that, number identified. Now, are we getting better at identifying, or are the number of returns just going up through the wall? Now, you notice they're catching most of the refunds now. And I agree, Henry. Henry thinks 23-24 is going to be a better comparison. It's going to be a better comparison of a lot of things because, generally speaking, the anomalies caused by COVID, either due to number of returns or delays or shutdowns, and due dates, right? We had 2 years of due dates that changed. So all of those things are going to be finally flushed out, and we're going to be able to better understand what's going on in terms of comparing these numbers. I do wish they had real-time dashboards so we could look at these things. They don't. So House is voting on funding, right? We're looking to stop the what's going on with the budget crisis, right? With not having a budget. So they are looking to drop another $1.1 billion off the federal budget, take another $10.2 billion from the Inflation Reduction Act. In order to do this, they're going to restrict IRS bonuses, take away money for firearms funding, and remove the weapons log requirement from the IRS. Very interesting stuff, but there's only 2,200 IRS employees authorized to carry a gun related to work. The amount that Senate is proposing is similar to fiscal 23. They're not proposing the cuts that the House is proposing. The Republicans are on the IRS on the offensive, asking the IRS about violations of the taxpayers' rights. So they've asked the IRS to respond to these taxpayer right violations. And this is triggered by a take to report on protocol breaches by IRS agents. In and of itself, they weren't out to get anybody, right? They're just following through. The IRM says do this. What are we really doing? So, of course, the Republicans, there's some of this stuff, they're just sidetracking the work of the IRS. They're requesting IRS plans for relief, training improvement, and future violation prevention. They've raised concerns about contacting taxpayers needing representation. That's been an issue forever, right? Is do people know first that they can be represented, and second, that there are avenues to get free representation, free assistance. We've had this discussion. If you've been in any of the programs I've done recently, I talked about a $37,000 CP2000 accuracy-related penalty. We were able to get kicked by going to tax court, and it went to appeals, and we won in appeals. And normally, this is something that you can't win, right? You can't even argue first-time abatement. You're precluded from that on an accuracy-related penalty. And what's bothersome is that, how many folks out there are fighting $500 and $1,000 penalties, and they don't have help, they don't have assistance. And even if they could get professional assistance from us, how much is it going to cost to get help with a $1,000 error in its tax return or a $1,000 penalty? So some of these things do need to be addressed from an equality standpoint. All right. I wanted to skip that. I thought I deleted it. Secretary Yellen, who, in New York, we call the Attorney General the AG. AG also stands for aspiring governor, because lots of folks that are our Attorney General end up being governor. In some cases, then, they go from Attorney General to governor to being removed from office. But thinking of Governor Emmy Award, Governor Cuomo, and Governor Spitzer. Anyway, that reminds me that Secretary Yellen, I always feel like she's running for something. I just don't know what it is yet. So she highlighted the IRS's 2024 goals in a recent communication to Congress. They're looking to get to an 85%. At an 85% level, they want a 5-minute average call wait and the callback option. Well, I guess if we all got call and queue, we'd get it down to that 5-minute wait. They are saying, though, that they've been successful with meeting their goals with respect to current taxpayer service, technology, and the free file program. Well, the actual free file program is, you saw, it's down 10%. I think they mean setting up their new program. She criticized the Republicans' bill cutting the IRS funding, but of course, she's a Democratic appointee, so of course there's going to be this pushback. And there are reports out there that show that actually cutting $10 billion results in a decrease of, I don't know, 80 or $100 billion in revenue, right? Because you're cutting enforcement. We have to answer the phone, we have to process payments, we have to process tax returns. What are some things that we can control the level of? We can control the level of enforcement, we can control the level of audit and exam and collections, and that's what's happening. So the business community, is a political item, are advocating for tax extenders. 1,300 businesses got together and are urging Congress to extend key tax breaks. A big one is the expensing of research and development credits, taking away the limit on interest expense deductions, and of course the famous, there's risks to jobs, risks to innovation. Without these extensions, nobody will want to invest. As far as jobs, I don't know. I don't think we need to protect any jobs. I can't find anybody to work either. And of course, there's concerns about their ability to reach a tax package agreement, right? I mean, I'm hearing that we're going to be into April or May before they come up with a budget. So as for the money we're raising now, going back that we started spending October 1st, I'll let you know in 6 months how much you're allowed to spend. It is quite interesting. Right. House Ways and Means Committee has marked up a disaster relief bill, Disaster Tax Relief Act of 2023, and they're looking to change the tax treatment of disaster-related losses and tax relief. So we'll be able to get a direct write-off in the year of payment for damage repair in presidential declared disaster areas. I didn't get any detail on that. This is about as far as we got. So they are looking maybe to head back towards where we were a few years ago, you know, with the ability to write these things off immediately. We'll see what happens. So e-signatures, this is a good thing. So a couple of years ago, I remember when I was still an NAEA member, I used to go to the fly-in, and we were carrying around when the IRS was looking to get, or when NAEA was looking to get the IRS to accept some sort of signature. And we were going around saying, we don't want you to create anything new. We want you to get DocuSign or whatever else. And you're trying to get these congressional staffers to understand what's going on here. And the importance of going back to basics. So you'd say to people, okay, did you refinance or buy a house recently? And almost everybody had. I said, how did you do it? Did you actually go sit at the bank and sign paperwork? And they all said basically the same thing. I did DocuSign or whatever the calling of it was. That's how I closed on it. I said, there you go. I said, we can't do that. They're like, really? What do you do? I said, I need an ink signed power of attorney form. And I then fax it in. And they shuddered when they heard this. Partially about the ink sign, partially about faxing it in to talk to a representative. And this was the push. And we're telling them this is a no cost item, right? We're not asking you to develop a product. We're not asking you to train people. We're asking you to take a friggin' DocuSign, which under the Digital Millennium Copyright or one of those acts is completely legal. We're asking you to take that and accept it. So finally, during the pandemic, we actually got them to move in that direction. But so the IRS is, so you saw that we had that list, and I actually gave you a copy in the handouts of the change to the IRM. And it's called 111623 deviation from handwritten signatures. And that document will show you the list of what is available and tells you in the IRM where to find it. You may get the occasional pushback from people. And you may need to say, by the way, I can give you this signature. We had a couple of things bounce back during the pandemic where we ended up sending back, like 10 pages to explain it. By the way, you do accept electronic signatures. Here's the list. Here's the dates. Oh, by the way, the date in that memo was extended. But IRS is indefinitely accepting electronic signatures on a whole bunch of forms. They're going to continue this until they can figure something out. They've extended the encrypted email policy until October 31st. Now, their idea of encrypted email is very interesting. They send a password-protected PDF, and right in the email they say, please use Mr. Smith's social security number to access this document. It's like, yeah, no, not safe. But this is their digital communication and compliance enhancement efforts. They know they're behind. They're trying to get there within the legal confines that they have, the constraints, plus needing to protect taxpayers' personally identifiable information. All right. So we heard Commissioner O'Donnell was talking about that this week. So, and they're trying to get to a fully digital environment. Makes you wonder if they have a meeting like on I played football in high school, and I always found it interesting that every day in the summer when we had practice, that the coaches wore the same colored shorts and shirt. It was like something out of Heartbreak Ridge with Clint Eastwood, right? Where he made everybody make sure they were wearing the exact same t-shirt, whatever it was. So it's kind of the same thing. How did you do that? So when I see that Werfel, O'Donnell, and Yellen are all talking about the same thing in the same week, I wonder who's telling them what to say and how to say it, because I know these things go through IRS communications, but I find it very interesting that they're all talking about the same thing. So they announced this week the increases for 401k and IRA limits for 2024. Now these things are indexed for inflation. $500, they track the increase, and when we get to $500, they move the bar. So 401k, 403b, 457 plans go from $22,500 to $23,000. We already have a $7,500 catch-up, which is not going to change. So those of us over the age of 50 can defer $30,500. IRA contributions have increased from $6,500 to $7,000. And adjustments reflect inflation, which gets updated every 2 years, provided that the rounding works. In the 1% inflation environment, you didn't see that. In a 10% inflation environment, it's a lot easier to see the bar move. It's enrolled agent renewal season. If your social security number ends in a 7, 8, or 9, you need to renew by January 31st. I want to remind you too, it's PTIN renewal season too. So if you have not renewed your PTIN, you should do that too. And if you're a continuing education provider, that's continuing education provider renewal season too. We just went through that process. All right, so Mark Dombrowski would remind you that the reason that Criminal Investigation Division has like a 99% conviction rate is because they pick and choose their cases. And of course they pick things they know they're going to win. So the IRS is ahead here in digital filing. Their changes to a digital IRS. So they've met their goal of digital correspondence ahead of schedule. If you've noticed digital notices, they're coming out now. They have QR codes. They have the ability to respond online. This is part of their idea that they can move to a fully digital filing system. I don't know that they'll be able to move to a fully digital system, but the old 80-20 rule, right? 80% of the notices they're sending out can probably be resolved digitally. They're simpler, they're more straightforward. Mark would remind you too, both of us in the 90s were in a pilot program called CASL, C-A-S-L, with the Philadelphia Service Center, where you could reach out to them for a CP2000 and other things and basically send a message to them and say, oh, by the way, that 1099-S was for a primary residence that qualified under Section 121. Can we just close this out? And a lot of times you could. It was very nice. Of course, that went away because it was useful and worked. All right. So they met their first goal in paperless processing's initiative. We now have digital submission of all correspondence and responses on certain IRS exams. Their next goal was that by the 2024 filing season, they would like the ability to e-file 20 more forms. 940, 941, and the Where's My Refund tool have all been updated. And they would like to see 4 million additional digital filings every year. Move away from paper and the cost of processing paper. And we're done. So, and this is, I apologize for the brief show. I ran out of time popping this together this week. So we will be here next Thursday. Hope to see you then. And we'll be here next Friday. I'll be Thanksgiving next Thursday. But every Friday now, we'll be back 3 p.m. At some point in January, it's going to move to 5 p.m. for tax season. And we'll be happy to see you then. Everybody have a great weekend.
Hi, Martha. Did John answer your question? I don't think he closed out the webinar. Oh, I don't think I have time to answer it.